In today's video, I'll explain almost 400 plus questions you will have on TFSA. You see this on the screen, all of this will be covered. In case you're new to my channel, Canada Tried and Tested brings first-hand experience on life in Canada, travel and money sense video. So don't forget to subscribe, like, share, and by doing this you're telling YouTube that this content is relevant. Now coming to TFSA, tax-free saving account. This is a registered saving account. While the name says saving account, I call this as an investment account, as the account not just gets you higher return if done right, you don't have to pay any taxes on the gain you make. Like what you see on the screen is my percentage of profit what I have made, and all this remains tax free provided I do all the right things as per the rule. So let's start with who can open TFSA. You need to meet minimum criteria to qualify, like you need to be a resident of Canada. In my case, I'm a permanent resident and I'm considered resident Canadian since 2019. That's when I landed in Canada as PR. When it comes to age, 18 year or over, that is the requirement. I am in Ontario and Ontario has 18 or over. Make sure to check your province or territory's age limit if there are any restrictions. In certain province and territory, the legal age which an individual can enter into contract, which includes opening of TFSA, is 19. In this case, when this individual turns 19 and is able to enter into contract in that jurisdiction, the TFSA contribution room for that year an individual turns 18 is carried over to the following year. If you are a non-resident of Canada, I'm sharing the detail on this screen. This is the interest what you would be paying. More details in the link in the description which you can check. Where can tax-free saving account be opened? This can be opened in person at bank, trust companies, insurance companies, credit union in Canada. I'm sharing the link below. You can check more details on this. You're not limited to one TFSA account as long as you don't over contribute. I'll be explaining this one by one. You're allowed to open multiple accounts either at the same issuer or through different institution. So as I said, let me just get into the explanation. I have my TFSA account with my bank with Wealthsimple and Questrade. Why I have three different accounts? With my bank, I have a fund manager who takes care of my investment. I'll explain this more in detail in a short while. With Wealthsimple and Questrade, I have a self-directed account. I do my research, then I make the decision where to invest. And to open the account with my bank, I had to make a physical visit. Not sure if things have changed after COVID. I'm sure online option would have been explored. With Wealthsimple and Questrade, it was online. Few simple steps. I had to provide my SIN number and date of birth. My account was active for next step. I'll make a separate video on tools I use to research for the stock as well as ETFs. So let's come to how TFSA works. Once you open a TFSA account with bank or institution of your preference and deposit that money will not grow. It will remain as it is. Like in case of bank, I had consultation with my bank's fund manager who asked about my short-term, long-term goal, what my risk appetite is, and based on my input, he moved my fund from this TFSA account to growth investment, and he is managing my portfolio, which is a decent double-digit return. I can see on my online bank page how my portfolio is doing. Now with Wealthsimple and Questrade, the amount which gets transferred, I do my research and decide where to invest. Mostly in Canadian stock, Canadian ETF, US stock and US ETF. That's where I do most of my investment. When it comes to US stock and ETF, I make sure not to invest any dividend paying security as it attracts 15% withholding tax. Instead, it's better to hold this US dividend paying stock in RRSP. You can choose any of the instrument, be it mutual fund, GIC, stock, bond, ETF by doing your own research like I do, and take help of professional to manage. Just ask your financial institution on this. One of the greatest feature of TFSA is its flexibility in terms of when you can withdraw your money. Unlike an RRSP, where you can withdraw under certain circumstances, you're free to withdraw at any time without penalty, but there are government mandate which limits to how much you can contribute every year. The maximum you are allowed to put in TFSA each year is known as contribution limit, and it varies from year to year. It's a good idea to make sure that you know your contribution room before you start, because over contribution comes with a nasty little penalty of 1% of excess contribution every month until it is withdrawn. Now I'll give an example of what happened to my wife after we landed in Canada as a permanent resident. That's in 2019. We had no idea what TFSA is. We inquired our bank what saving options we have to keep up with our future requirement and the flexibility to take the money out when we require. For this, we had taken an appointment with the advisor, which was a physical visit. Now we had landed in 2019. However, the TFSA contribution room, this was introduced in 2009. You see this table, this shows each year contribution limit. So for some reason, the advisor made an error and said we have this entire room till 2009. My wife, she was really thrilled, and as advised by the advisor, gave a go ahead to transfer almost everything she had from her saving account to TFSA. When I started to go through the rules, I understood the mistake and informed my wife that she has over contributed and her contribution room was only 6,000. Before 2019, we were not in Canada. We were not a resident and we did not have any contribution room. Now usually this confusion about contribution room will not happen from second year. Once you have your CRA online account, you get to see your contribution room. During the first year, you will not have this access to CRA online account. You get this only after filing your first income tax return. So what she did, first she took out the excess money immediately. I think it was less than a month since she had deposited into TFSA, and then raised an ombuds with bank for wrong advice. Now this TFSA transfer was done by the advisor from my wife's saving account to TFSA, and this was during a scheduled appointment. We had all the record. So our bank understood that they made a mistake. I negotiated with them on two things. Any penalty which comes from CRA as a result of over contribution, the bank will be responsible to pay. And I negotiated on getting a premium customer package for 1 year. Then my wife called CRA, explained our situation since we were new immigrant and this was our first mistake. No penalty was given to my wife. This is our first-hand experience. Now I have devised a foolproof mechanism not to over contribute. I deposit the yearly room at once. Keep the money in TFSA account, be it with bank, Wealthsimple, Questrade. And then whenever I do my research on where to invest, I move the money. For the entire year, I don't have to think about it. To buy US stock, which I do with only Questrade, first I convert the deposited money to USD and then go and buy the stock. This process keeps my mind uncluttered forever. If and when you do withdraw money from the TFSA, the amount you take out is added to your contribution limit at the start of the next calendar year. For example, if you have already reached a contribution limit and you withdraw $4,000 from your TFSA this year, you would need to wait till January 1st of the next year to add that 4,000 back. And the TFSA contribution room does not disappear if you fail to contribute in a given year. It just rolls over to the next year. So you will have an ever expanding contribution limit. Let's look at what are the benefit of TFSA. A TFSA allows you to set money aside in eligible investment and watch those saving grow tax-free throughout the lifetime. Interest, dividend, capital gain, what are earned in TFSA are tax-free for life. Your TFSA saving can be withdrawn from your account at any time for any reason, and all withdrawals are tax-free. And if you want, you can put back the amount you withdraw into TFSA. However, you'll have to do it in following year so that it's not impacting your contribution room. Now let's look at the disadvantage. The contribution rooms are not tax deductible. When you put money into your RRSP, you receive a tax credit that will reduce your income tax owing. With TFSA, you do not get any tax break. So if one of your key objective is to reduce the tax bill, then RRSP is the choice. Now there is no grace for over contribution. Be careful not to put any money more than your contribution limit. If you do, you will face a penalty of 1% per month. And this is different from RRSP, which offers one-time over contribution allowance of $2,000. This is not protected from creditors. If you owe any money, your TFSA holdings can be seized by your creditors. Your RRSP account are protected from the creditors. Now there are 4 mistakes to avoid. I'll make a detailed video, but I will highlight those 4 mistakes here. First is holding cash in TFSA. It will just sit there. Withdrawing TFSA as a cash to set up another TFSA, over contributing, which I have already talked about, and not opening TFSA at all. Naming spouse a beneficiary instead of successor holder, and not recognizing how market gain and loss impact your future contribution rule. Do your research. Choosing non-qualified investment. Now I don't have this problem with Wealthsimple and Questrade. They don't show me if it is not a qualified investment. And carrying business is a big no. If you're aggressively day trading or you have high frequency, this may trigger alarm. Now let's see what is the difference between TFSA and RRSP. TFSA and RRSP are both investment vehicles with attractive tax advantage that can help map out your financial future. These two accounts have several differences, and it's important to understand the benefit of each before making an investment decision. When it comes to TFSA, it's an investment account that can be used dynamically. As your life and financial objectives changes, your TFSA can adapt accordingly to optimize your goal. One of the major advantage of TFSA is that you can make the withdrawal as you fit with no penalty. You're free to invest, that is reinvest those withdrawal in the later year, and the contribution is not determined by your income. All eligible resident Canadian are restricted to same annual contribution amount, whereas RRSP, on the other hand, is an investment account meant to provide you with income at retirement. Unlike a TFSA, your annual contribution limit here is determined by your prior year income, subjected to maximum annual limit. Are there any circumstances where TFSA can be taxed? Although it is technically tax-free account, it's in the name, right? There are some instances where you will be taxed on your account. Generally, interest, dividends or capital gain earned on investment in TFSA are not taxable, both when they are in account and when they are withdrawn. But if you invest in US securities and get any dividend from those US listed stock and ETF, this may be subjected to a non-resident withholding tax of generally 15%, which is levied by IRS. I had few dividend stocks initially, but now I make sure beforehand that I don't have any dividend stock. If you are non-resident of Canada, I'm sharing the website, and you make a contribution to TFSA during the year, when you're non-resident, you will be charged 1% monthly tax on those contributions. If you're day trading or frequently trading through TFSA, that might be considered as a business activity by CRA. It might flag for audit and you might be in for a surprise. Moving a TFSA from one bank to another bank or financial institution, while there may be fee to transfer your TFSA, it might get reimbursed by your new financial institution. So a call to both institutions will help you to understand beforehand if there are any charges. Also, depending on type of holding, there can be fees associated choosing one over the other. If you choose to transfer your account from another broker institution to say Questrade offers a rebate of $150 to your account on old brokerage charge. This way, if the old broker charges say $150, so this will get netted off. As I said before, just make sure you don't withdraw the money from your institution and then deposit. You may end up considered for over contribution. How to avoid TFSA transfer fee? So to avoid these hefty fee, take advantage of recontribution rule. Withdraw the fund from your current TFSA near the end of the calendar year, and then in the following year open a new account at the financial institution of your choice and and recontribute your withdrawal to it. Coming to death of TFSA holder, well, no one likes talking about this, but this is very important. I'll give an example of India. Whenever you make any investment, buy insurance, by default, you are asked for nominee detail. Surprisingly, that did not happen with opening of TFSA, be it with bank, Wealthsimple or Questrade. I had to call and then initiate on my own. Now in Canada, there are two terms, survivor and beneficiary. Say if the account holder passes away, what happens? In the case of the successor, this can be either a spouse or common law partner. I'm sharing the link, you can go and check that. They would receive the entire TFSA from the deceased person and can continue to grow this account tax free. This is not going to increase or decrease the successor holder's contribution room in any way. If the beneficiary, everybody else who inherits TFSA is designated beneficiary, they would receive the cash from TFSA. The cash can be placed in the beneficiary's TFSA if they have enough contribution room. Otherwise, it would go into taxable account and they would be responsible for paying taxes on any growth following the death of original account holder. So friends, I have downloaded as much information as possible on TFSA. In case you have any more questions or you want me to make a detailed video on any of the topic, do comment and I'll surely respond. Don't forget to like, share and subscribe. Also, do check out my website where I have organized everything for you. Thank you for watching Canada Tried and Tested.